Good evening and welcome to Traders Group. During the week, I had one of our group call me and just make comment about the way I draw trend lines on screen. And so I'm just going to draw some trend lines on the screen and put my level of interpretation on the trend line. In terms of a tool and its quality, a trend line is to me meaningless. There is no quality or forecasting quality to a trend line. So I put very little emphasis on it, but that said, I do work very quickly and just want to slow down a fraction and describe what I'm doing. You've heard me use the words external and internal trend lines, and you've heard me use the term trend line of best fit. So let me do a trend line of best fit. I'll do that first. So what I'm looking for on the April low, which is the beginning of this current trend, is the lowest close on the market. So I'm going to put my cursor on the lowest close, and I'm going to take it up to the current lowest close, which was just last night. That to me is a trend line of best fit. Some may argue, Paul, that is incorrect because you just cut through the April and the May low. If you want to draw in the April and the May low, be my guest. So let's do that. So I've now drawn through the April and the May low, and both trend lines transmit the exact same information and the only information, that is that the market's moving in a direction, irrespective if I do an internal, external trend line of best fit. Is really, to me, absolutely not even relevant. In fact, I just noticed I could take this back from here and go through the whole thing, but that's silly. It is quite irrelevant, exactly how I draw a trend line. It only has one purpose, establishes the trend, that's it. It does not predict or have any connection to where the market's going to head to, and it has no preemptive quality that's where the market's going to stop and bounce. That is a big load of baloney. Markets can cut through any line you wish to choose on screen, and you will interpret that trend line in hindsight if it works as your very clever analysis, and if it didn't work, you'll pretend it didn't happen. That's the way people work in financial markets. So I'm hoping this is of use to that person that asked the question, and that is, it really doesn't matter. Don't overemphasize, don't over-engineer, and don't overthink a trend line. They're just a simple tool for picking up the trend. So let's now use these two trend lines on screen to have a discussion now of potential levels of support. I underline the word potential because the trend line doesn't dictate that line as a support line. What dictates that line as a support line is the activity of traders within the market. And I would suggest the first upper trend line, which I'm now going to get rid of the bottom one, is the most probable, when I say most probable, but not definite, point of which the market is going to start to find some support and bounce. It is at this point, a logical place for the market to make a move. Why? Because if the market goes any further from here to the downside and breaks through that trend line, that would mean it's broken through a previous swing low, which would be a big indication of weakness. Therefore, I think, just from past observation over decades, it is a logical place for the market to make a move to the upside, and is probably a strong level of support. And I use the word probably because you don't know, and neither do I. And that's where people look at trend lines as they have some predictive quality to them. That's just nonsense. So all as we can say is it is most likely that this market will stop maybe tonight, or it should. It is sitting on a fairly shallow Fibonacci if I use the range from the low, which is 0.382. So it is sitting on a Fibonacci. It is sitting on a trend line. It is at a point where you wouldn't want it to break the previous swing low. But you know what I haven't got? I haven't got any indication that negative volume is the selling volume has been increasing since last week. and still is last night. So if it is going to turn tonight or the following session would be that point at which the market would start to, in a volume sense, establish this as an actual level of support within the market. Could the market continue to the second external trend line? Of course it can do that. It can do whatever it likes. So could it go down to the next level? It can do that, and maybe it will. It really doesn't matter. But if it does do to that trend line, it's actually pointing towards a level of weakness or unanticipated weakness that I wouldn't have expected. But anything is possible within the market. The fact that this market's had a pullback is absolutely of zero mystery to everyone in the room. 2 weeks ago, when we were talking about the current position of the market, we were suggesting that it was in a position which is quite extended above its moving average. I don't need to put the moving average back on. I would have also mentioned, and if I didn't, it would have been a remiss of me, but I'm sure I would have also mentioned that the market ranges are exactly the same. When markets extend 100% of each other and the current position of the market is extended above its moving average, you must have heard me say these words 1 billion times. There's a high degree of certainty that the market is overextended and will have a reversion back to its moving average. That is exactly what's happened. So what I would love to see, and what I hope, is to see a reversal starting this evening. There is a little bit of an indication on that on the overseas, on the overnight market, but at this point, it's 7 minutes past 5 a.m. in the morning, ET USA. It's just a little bit early for markets to, for traders to be paying attention. I just want to just read a comment that Bill's typed in. Okay, very good point, Bill. I'm going to read Bill's comment out so we can weave in Bill's comments into the discussion. Bill says, Paul, your comments about the S&P 500 are very well taken, but what is the importance of the fact that nearly every other major index in the world is going down or sideways? Okay, that is not true for Australia. If you're referring to the DAX, that is not true for the DAX. If you're referring to the Asian Shanghai Composite, that is a true statement. So there's a very broad statement you've made, Bill. That's not true. Every index in the world is not going down. And let's go look at that right now. Let me just jump over quickly. So I'm going to address just what you just said. Let me just jump very quickly to IWM. Looking at the IWM, I drew a few lines on screen before I logged in. And I noticed that the market also had been doing these regular ranges to the upside, overextended. I think at this point, let me put up the moving average because it's an important, reference on screen. Just give me one moment. I don't know why I wiped it out. It was annoying me earlier on. There's too much information on screen. So as per usual practice, I'm going to use exponential and I'm going to use a 20. Okay, so as we can see, a week ago, the IWM was well and truly extended over its average, and also it was at the end of an extension which was equal to the previous two extensions, highly predisposed to pulling back. I make note that on the basis of this recent range, the market has pulled back to 0.618. If it pulls back deeper and keeps on going, something else may be happening in this market. But at the moment, from what I see, it is pretty normal. Okay, let's address the other indices that Bill's referred to. And the first one Bill's referring to, he's talking to me via a chat panel on a different, I'm looking at a different screen as the DAX. Let's go check out the DAX. So I'm not going to we can look at EWG. The problem with looking at EWG is it's got a currency effect on the chart. EWG is in US dollars, and we've got the US dollar going up strongly against all currencies. So you can't really look at EWG to make a good determination what's happening in Europe. So let's look at the DAX index within Germany. Did anyone see that German game last night against Korea? Oh my, what a shocker. Talking to friends in Germany, they were cringing. Okay, so let's look at this particular chart. What do I see on the chart? And I did look at this before I came online. We see a solid accumulation phase and a very large rally. I then can see a market that has, in a very broad basis, done a 0.618 pullback of its range from April to mid-May. Is this normal? Of course it's normal. Is it of a worry? No, it's not a worry. It's actually totally normal. Markets do 0.618 pullbacks. Is it a bit deeper than I would like? It is a bit deeper than I would like. I would like to see a market do a very shallow pullback, maybe to 0.5, 0.382, which is an indicator of strength. But at this point in time, my view is on the DAX index, it's looking fine. As long as, and we have done this many times, as long as, this is where it stops. If we're standing here next week and it's threatening the low at 11,700 or going and breaking a previous swing low, something else is happening to the market. If I'm looking at this, so is every other technical-based quantitative analysis on the planet, and they all are telling their boys tonight, boys, we should be buying this particular index at its technical pullback at 0.618, and that's usually a trigger for mass coordinated action across the planet because we're all of the same training. We've all looked at the same tools. We're all looking at the same thing in real time. So, Bill, you may be right, but not just yet. But that's not the only index on the planet. Let's go down to the Chinese markets. But before I jump off that, before I go too quickly, let me just put up EWG. But I think I've been mentioning this each week. You can't, with a strong US dollar, these charts are not really worthy of looking at, as long as you take that into account. Let's look at the Shanghai Composite. Let's just stick with the SHG. Is this chart a worry? Absolutely. And this is essentially the only chart that is breaking down. When you look at the internal index of the country, why is this so? Well, you listen to our friend Trump, not our friend Trump, you listen to the US President, Mr. Trump, and his continuing trade negative talk towards China, which I somewhat think is probably justified. And it's not surprising that growth in the Chinese market is a little bit threatened. And I think the World Bank, I may have mentioned last week, is predicting a slowdown in China. That is not a good thing for us. That is not a good thing for Australia, and it could have implications on the growth of our index in the not too distant future. What I believe will happen within 3 to 6 months is the whole picture will change. It is very similar, if you just think back 6 months, to the squabbling with North Korea. Mr. Trump comes out with a very strident and very forceful position, and then when he starts to get what he is asking for, he'll back away and he'll come and meet people in the middle ground. If you don't know his style, go watch The Apprentice, reruns of The Apprentice on, or any shows on Trump. That's his style, and I think he's pretty true to character. And things will change. The Chinese will compromise, and we'll all be buddies again. And the reason we need to be friendly is because we all need each other to ensure that the stability of political systems around the world remain so. We don't want to be enemies. So I agree with you when I look at China. The implications, the short-term implications for this particular economy, one, lessening demand for metals and mining is an obvious one, but the other one, we've got a highly correlated currency chart with the Shanghai Composite. So while this chart's going down, expect, and this is not news to us because we've been forecasting it, expect a continuing onward decline of the Australian dollar, which is great for exporters who have got contracts in US dollars. Who would they be in Australia? They would be metals and mining producers in Australia. They got their contracts in US dollars. They are making money hand over fist. They could be people like you and me who hold US dollars. I do earn some US dollars in my business, so that's good for me. So it is not a bad thing to have a declining currency. It makes us more competitive. It stimulates our economy, makes it more attractive for tourists. to come here if there's the right differential, especially US tourists. Makes it horrible if you're going overseas, which I'm not. Or maybe, hang on, I'm going to Tasmania. That was a very poor joke. Sorry, Bill. So it's got its pluses and minuses. We'll have a look at the implications of the the interplay between currencies and metals and mining in a moment. But let's continue on the indexes because we need to do Australia. Australia, let's have a look at the chart through EWA. Once again, please understand that this is being heavily affected by a massive rise in the US dollar, which means a major decline in the Aussie dollar, which is affecting the natural movement of this chart. It's not normal. The normal movement of the chart can only be seen through XJO or the All Ordinaries Index. And what we see is an extremely, extremely strong chart. This market has, as we know from last week, had a very strong rally, reached 0.618 and has bounced away from that 0.618, and it's done a little counter trend. If the US market has finished its pullback, which it may, we just looked at the trend lines, and that starts to break to the upside, this is going to have a very strong rally up to the next level, which is 63.78. Disappointingly, we're coming up to the end of the financial year, and I had this target in my head. I'm not going to reach it. It's really annoying. I was hoping we rallied into the end of the financial year, and we had this pullback, which is shaved. Well, I haven't checked my account, but I'm talking superannuation returns for the end of the year. I was really hoping for a blockbuster result, but you can't force the market to do what it does. So it'll still get a great result. It just won't be what I was wishing for, which was in the mid-20s. That's not going to happen for me this year. But this looks really, really strong. My forecast for the Australian market is it's going to get stronger. Why? Because there's elements at play which are supporting this market. And one is the Australian dollar. Two, because the Australian dollar is falling, if you look at the metals and mining, let's do that. Let's look at the interplay. First of all, let's look at XME. This is a US metals and mining chart. Just get the picture in your head. What do you see on screen? You see a chart that is breaking down, yes? So metals and mining is theoretically weakening due to what? Due to the Chinese market, theoretically, okay? So there's an issue there. But then how do we explain, therefore, if we go and look at XMM, which is the Australian chart, which looks extremely bullish and looks like it's about to break up. How do you explain that? Well, it's not too difficult. We just did. You explain it because metals and mining companies write contracts in US dollars, which means there's a major currency lift to these companies. One would be CSL. We go, look, CSL's got a network across the United States. It earns huge US dollars. I need a drink, sorry. Lots of US dollars. So are these companies. So hence the difference in these charts. This looks like if it breaks the upside, it's going to do a nice higher low. It's a kind of it's not really a W pattern. It's a I don't know what to call it. It's a pattern on screen which looks pretty damn bullish if it's a higher low. It's looking really, really, really quite strong. So the two things, as we know, that drives the Australian market is metals and mining, and due to what I just explained, it looks bullish, and I still would forecast that bullishness, even with the declining Chinese market. But there's this currency effect, and the second element within the Australian market is the banking sector, which has had this major recovery, even in the face of a continuing negative flow of news daily. If you listen to, the Royal Commission, on a daily basis, the bank's getting caned, and, my sense and feeling on that. And this particular chart, which you're looking at, is XXJ, which is finance sector in Australia minus REITs. Since I spoke to you last week, I drew an ugly right shoulder on the pattern, but it doesn't have to put in a right shoulder. What can happen is this can just go. Now, this chart hasn't broken trend, I might add. So that's why I'm, I've got the inverted head and shoulders pattern on screen, but it doesn't have to do this. It can go straight up. Next week we can see this just take off. So it's either going to do, I believe, one or the other. I think time is moving on. It is now coming up to July, August. I think the Royal Commission continues into September. I can't get any worse. I think the market's absorbed the negativity of what's flowing from that commission. Therefore, we were only saying, as I said last week, 2 weeks ago, there's going to be a point where the banks are undervalued and the valuation models dictate extreme buying by funds. And I think that's what we're seeing at the moment, which means we've got the two strongest, broadest sectors in the Australian market that is supporting our index. Therefore, in conjunction with every other sector, which is in extreme bull market moves, I am forecasting ongoing strong growth in the Australian market. Alan just typed in not a question, triangle on XMM. Sorry, mate, I missed that. But why don't I go back to it? Just give me 1 moment. Triangle on XMM. Okay, I see what you mean. See, thanks for that. So this is what Alan's saying. He's seeing a pattern in there, which is quite correct. It's a triangle pattern. And it's good to put things in patterns. It allows our brain to make sense. It's a symmetrical triangle pattern. Okay, that's what you would call it in Tech Analysis 101. Okay, I didn't finish my discussion. So if finance and metals and mining are supportive to the upside, in conjunction with, and I believe I showed you this last week, I believe we're in a roaring bull market. It's not as obvious as people, this isn't even being talked about, but when I see technically each chart, I don't care what I look at. XMM, which is metals and mining, material sector, strong. I'll skip the XMM. XHJ, you know what tells me it's strong? Look at the shallowness of the pullback. If the market breaks up from here tomorrow, this is getting this particular chart is actually getting stronger. Why is it getting stronger? We've talked about this with Mike Solar stocks because if it turns out that the pullback is above the previous swing high, that is an increasing indication of momentum within this market. So I think I zoomed through all these charts earlier today. They're all having shallow pullbacks, which tell me strength. Of course, it's not strength until it takes off, but that's what it appears to be setting up for, including energies, which I haven't got any, but trying to pretend I maybe have. But every single chart, there's not one chart that I can give you. The only chart of ugliness would be the telecoms. So that's a really synchronized market. It's going to check out utilities, which is defensive. It's not going anywhere, but it's not going down. And this is the worst chart. Telecoms should be looking ugly. And it is horrible, and it will continue to be horrible for quite a while. So is the Aussie market looking strong? Absolutely. Is XJO looking really strong? Absolutely. It's really looking good. And who was showing me the other day? I think it was Richard. Just check if Richard's in the room. No. Richard said to me that how he views the market is as a cup and handles pattern in a very broad sense. And again, I think he's probably right. This is XJO. I've just drawn a funny looking pattern on screen, but it is. It's a cup and handle pattern. And the forecast that I have on screen is based on what I've done previously, the range from April to May. Then I've grabbed that range and I've marked it up, and that's where the 0.618 and the 100 levels are. Usually, if I can do these extensions in many different ways, but whether I use that extension or whether I use the depth of the cup or the depth of the pattern, it doesn't matter. It's the same. And go from the bottom of the cup to the top of the cup, mark it up from the swing low, and obviously we get the same levels. So are those levels probably reasonably accurate? I think they are, and I expect next week we'll probably see a 3 or 4 day rally into the first week of the financial year, which will be fantastic. And this is looking strong. This is looking really good. And maybe I should shift a bit of money back to Australia. This is starting to shape up to be good. I think there are other fundamental drivers. One is personal tax cuts by the federal government, and the other is the debate with company tax. I believe it's a good thing. I don't want to politicize a technical analytical discussion. It's good though because it makes us more attractive to investors to operate within Australia in a low tax environment. Therefore, it attracts overseas investment, which stimulates our economy. So I get all the Labor's arguments, but we need a psychological shift within Australia that kicks us into a major growth phase. We have been in the doldrums for a long time. If you don't believe that is true, speak to any small business person in Australia. It is for them, it's a really low growth environment, and we should be able to connect that to what we hear on the TV. It's due to low wage growth, and people are really not spending generally across Australia, and that's been in play for 2 or 3 years. I think it is changing, and that's why sometimes the politics of the country is about shifting everyone's psychology, and I think that is a good thing, the discussions that are being had, and I hope they continue when they meet a resolution and things start to move. Before I move too quickly, I've got some interesting information from a volume perspective on EWA. EWA, I know it's not representative of XJO due to the currency effect, but that said, there is a major shift in the buying volume behavior from last week to this week in EWA, which indicates funds in the United States have started to buy EWA, full well knowing about what we're talking about the banks and the metals and mining and the currency. So there is a real bit of positive information from a volume perspective on EWA. When I look at the volume supporting information for all other indexes, they have got weaker since last week. So the buying volume has dissipated dramatically, but that is not unusual because what are we in? We're in a counter trend within the market. So when we do have a counter trend, the buying selling behavior, the pattern shifts. It's not unexpected, but at this point, I would expect it to change. I'm just going to flick across to an overnight chart. This is SP100 on the overnight market. Nothing convincing of yet. It's, as I said, too early, but it is slightly green, and we'll watch that as the day or the evening moves on. Okay, let's go have a look at the sectors of the market, because I just made a comment that, if I could click the right button, that I believe, and I've been saying this for weeks now, Australia is in a really roaring, strong bull market, which has been hidden by and I've just gone and clicked an incorrect button on the screen, but it's been hidden by the banks. The banks have been holding our market back. But every sector of our market, except telecoms, has been looking fantastic. When I look at this particular sector rotation chart, reading it from comparative relative strength perspective, everything on this screen is extremely strong. The strongest element or the strongest sector within this market is healthcare. The second strongest element within this chart is energies. The third strongest is metals and mining. The fourth strongest is information technology, doing a right rotation, which indicates a big move, and that would be true for healthcare. Consumer discrete, there's nothing. I can't see anything on the screen which I would be scared of. Telecoms we've talked about is its only dog in the whole picture, and here's a buy signal. This is finance. Finance has been a shocker. This is XXJ minus REITs, has been a shocker, but guess what? It's about to do what I describe as 2 data points to the right on the weakening quadrant, which means it's a buy. That is the beginning of a trend, and you can match that up with the inverted head and shoulders pattern that we just described, and it all kind of makes sense. Even when I look at that red line, it's the REITs. This particular market is completely synchronized. All sectors are growing. What does that tell you? All sectors are growing. That's a very unusual picture because it's very different to the United States. If we come across to the United States, that is not a true statement for the US markets. I'm going to turn something off. First of all, the strongest elements on the US chart, there is three primary drivers of strength. We'll talk about oil in depth in a moment. Alan sent me some information on it. USO, which is Texas Light Crude, and energy, obviously two of the strongest elements on this screen. The second two other sectors which are showing strength are the tech sector and the consumer discretionary. Tech has been a forever strong driver of US growth, and for good reason. We live in a technological world where innovation is driving the markets all the time. And consumer discretionary is easily explained, as I have in the past, due to the full employment in the United States. The US market is a consumer-led economy. If people have got good wage growth, which they're starting to have in the past year in the US, you would expect consumer discretionary to take off. Warning, XME. Now, XME on screen looks rather weak. Why is that weak? Because it's in US dollars, and which is in contrast to the metals and mining within the Australian market, which, as you know, is actually is looking bullish due to currency effects. So this chart is not the same. Finance is not looking great. That is, the big finance companies are not looking great. Industrials, I got out of all my industrials 3 weeks ago. I don't hold any industrials anymore. What's good? XLV, not strong, but has got potential. This is completely different. There is XLP, which is consumer staples, looking horrible. I'm looking for telecoms on this chart. I can't see them. Okay, telecoms, here it is here. I've got to highlight it. It's the orange line. It is about to go into the weakening quadrant. It's a shocker. So there's 1, 2, 3, 4, 5, potentially 6 out of 10 elements on this chart that I don't like, which is in complete contrast to the Aussie market. This market is being supported by 4 sectors. The Aussie market is supported by 9. Very, very different picture. Very different. And the United States market is probably, it needs to just get through the Trumpism, the Trump effect just at the moment. I think if Trump can just get through all his little issues with tariffs, they will be to the US advantage, and you'll watch this market make its move. In the meantime, it is what it is, and it's what we've described. It is an upward trending market, which is a low momentum environment and continues to be so, especially with these deep pullbacks. It just is. It's a bull market. Everything's good, has accumulated, is going up. Every time we get to these pullbacks, it looks really scary, and we've had, I believe, the same discussions on the last 2 pullbacks with increased selling volume, and then that's the point of inflection. This probably is the point of inflection on this screen. Okay, let me just go to the US market. Sorry, I didn't mean to say that. I misspoke. Let me go to other elements of the commodities market and the currency market, just to get a full picture of global markets and give you some confidence in what is happening around the world. Just give me one moment. First of all, I'll pick up the Australian dollar. The Australian dollar has been, as it comes up on screen, I will flick it over to a weekly chart to give it a context. Just give it a few moments. Your screen should be black because mine's black. Okay, so this is the Australian dollar, and we are well aware that it had been moving up in a very low momentum pattern for a very long time, and of late has broken down out of that upward move. We have also looked at this particular chart, and it's not, we know the reasons why it's falling, and I can suggest that, it's probably getting close to a point on screen. If I come now down with a bit more detail to a daily chart, where we could expect, this is all the lines I drew on last week, where we could expect potentially the market to stop falling. I'm just going to clean this chart up a bit. There's way too much information on screen. But what I did last week was I drew a Fibonacci extension to the downside. It was based on the previous range. The previous range is the range I'm about to draw from the mid-April to mid-May. And that particular range has now been repeated from early June to late June. And what I do see is the market is falling. That's pretty damn obvious. But what you can't see is what's happening with institutions in terms of their buying and selling behavior. What I see within that is a decline, and a fairly significant decline in the selling behavior. So if selling volumes were at, say, 100, selling volumes are now at 10. So they were really strong last week. They're not as strong. That's how it works. And then when we're here next week, it may go through this 100, but then we'll see some sort of evidence of a bottoming behavior, a bit of bouncing around, a bit of accumulation, and it'll go into its next counter trend. So is this good? It is good if you're holding US dollars. It's good if you're an exporter. It's good if you earn US dollars in your daily lives. It's good. So it makes us more competitive, and it's a good thing for business at this point in time. Where is this going? I've got no idea where it's going. I'll tell you that when we go through the next accumulation, the next counter trend, and we have another leg down, then I'll tell you where it's going to go. But at this point, it's still falling, hasn't done accumulation, hasn't started its counter trend. If the Aussie dollar has fallen so nicely, the US dollar should have risen ever so nicely against the Australian dollar. And as we look at the currency pair traded on the Australian stock market, we can see that to be a true statement. For perspective, let me take it out to a weekly chart. And we already know what's happening, that the market has been in a strong downtrend, but of late on a weekly chart, a strong break. And on a weekly chart, it is a higher low, major sign of strength, which looks like it probably is going to continue. Coming down onto a daily chart, we can see from lines that we drew last week, clearing up some of the mess on screen so you can actually see something, that the market has reached 100% extension of its previous range. Where did that 100% extension come from? It came from the last range, from low to high. I used it last week, from low to high. It's nearly reached it. Interestingly, as it's reaching that 100% extension, I look at the volume behavior on the Aussie dollar currency pair, and it's actually the reverse of FXA. Even though they're on different exchanges, there's been a fairly significant decline in buying behavior. So if the buying behavior was measured by the number last week, 100, that was the pressure number, it's now at 10. So it's gone and reversed. It's dissipated. So as markets reach levels that the market decides that that's the end of the extension, markets can still go up, but the buying pressure dissipates, the markets top out, the market's full. What's going to happen? I've got no idea what's going to happen, but this is a logical point for it to find a short-term top and start to fall. If the US dollar has been strongly up, the Australian dollar has been strongly down, and gold is a proxy currency, I don't think it's hard to guess what gold is doing and what has been done and what we forecast in the last few weeks to be correct. Giving it perspective, starting with a weekly chart, we know that gold, you've got a black screen waiting for it to come up. We know gold has been tracking up in a very ugly looking low momentum channel. And of late, we have on a daily chart made mention that the market was sitting on a trend line, which I said to you last week, 2 weeks ago now, it's likely to be broken. The reason I said that was because of the volume behavior on that trend line. The volume behavior for gold in the last 3 weeks has been increasingly going negative, and that trend has increased this week. So it is still, going, and there's no evidence of it stopping just yet. I'm sure if I played with this chart, which I haven't, and done some ranges on screen, it's probably at a previous extension. But it's not a pure currency, but it is, roughly negatively correlated with the US dollar. So therefore, it would be, at this point, if I'm standing here, people are going, where's it going? It's going down until otherwise proven, and that would be we get evidence of a bottom coming in. Nothing that we haven't known or didn't forecast. Just looking at my pad, making sure I haven't missed anything. Okay. Just coming across to the oil market. I have been very uncertain about the oil market, and I've had conflicting bits of information on screen, so I haven't been very committed to any point of view. And last week I was suggesting that there's further evidence. I was going back to my notes. I'm going back to last week's notes and just looking, why did I say what I said? What I said was, last week I was looking at a continuation of oil to the downside. The reasons for why I said that was because the market 5 days ago had broken trend, had done a bit of a test or retest, but the volume behavior did not support an upward market move. Now that obviously has changed in 1 week, and we can see this huge move to the upside. And Alan sent me some fundamental information, a couple of points. The major driver at this point is the North American demand. They are in their summer period, and during that summer period, we get a lot of, as we do in Australia, a lot of people out there holidaying, driving around, increased demand for petroleum products. Hence, usually there is a season where demand kicks in, especially North America, and the chart generally goes up. There are also other fundamentals that Alan sent me. It's connected to the oil inventories. There was an inventory report coming out last night that Alan sent us, and they were predicted to fall by 9.9 million barrels. That was after OPEC said they were increasing increasing production to let the market cool off a bit, and the inventory report was not as expected. It fell by 9.9 million barrels, which was way beyond the 2.4 million barrel drawdown, which was forecast. So that's the reason for the spike you've seen in oil. Will it be maintained? Maybe, probably. All indications are yes, it will be. And the relative strength chart says that oil and XLE, if I go a step back, are the two strongest elements on the chart. Should have I had exposure to oil? In hindsight, it's always, of course, I should have had it last week. But if I was standing here last week, there was no evidence to do such a thing. So it's fine. I'm in every other strong sector of the market. I don't need to be in oil. I'm absolutely fine. While I'm on energy products, someone asked me 2 weeks ago about UNG. UNG is natural gas. It's an exchange traded fund, also in a cup and saucer style pattern. It has strong support from a volume perspective and should continue to the upside quite strongly. Other energy stocks which Mike has given us, which are alternate energy stocks, and they are the Solar Stock Group, and just the two that we've been tracking have been RUN. It's coming up on screen, just taking a while to upload. This is the stock that I described as a very high momentum stock when he gave us. Shallow pullbacks indicate increasing momentum, and if this is the end of the pullback, once again, it's sitting on top of a previous swing high and will have a large rally to the upside. His other stock, which was ENPH, was not as strong, but I do note that it's had this massive rally in the past week. So it is a strong stock, but is a low momentum stock. Why is it a low momentum stock? Because the pullbacks are falling deep inside the previous swing high. So it still is a good stock to invest in, and it's looking great. Other stocks of note locally, I don't follow a lot of the ASX 300 stocks, but I do follow TTT, and I mention it because I think it's a buy. TTT, it's basically the only one I follow. TTT, I've been in and out of this stock. I've made my money. I'm not going to buy it. But I just thought I'd mention that from a perspective of pattern, and you've got a black screen. I don't know why from the perspective of pattern, it's done this very nice pullback. I'm just going to put a Fibonacci ratio on it from the low to the high. The pullback is exactly 50%. She's broken to the upside. She's trading above its moving average. Moving average is pointing up. The last piece of information I'd like on this particular chart would be the volume behavior. Just give me one moment. Got some volume charts somewhere here. Just give me one moment. Just going to type it in. TTT-ASX. Okay, I just want to see the volume information. So, looking good. So this is the only volume information I've got for Australia. Accumulation distribution strongly tracking up. On balance volume is pointing down, but starting to point up as of this little rally that we're having. So all indications that TTT is an ongoing, interesting thing that you could be looking at. Just coming back in summary to the main index, just looking at internal figures, can I see anything that is scaring me? The answer is no. In terms of advancing and declining stocks, last week there was 233 advancing, 219 declining. This week is 203 advancing, 273 declining. There is the selling volumes of the declining stocks are slightly greater than the buying volumes of the advancing stocks, but I've been here many times, and every time we get on a counter trend, this is exactly what it looks like. It's nothing dramatically abnormal. In terms of new highs, new lows, there were 6 last week. There were 24 new highs, 5 new lows. This week, there are 17 new highs and 8 new lows. Again, there's nothing dramatic about these numbers. Nothing at all. I think I'm going to review questions in a moment. I may have covered everything I need to cover. I've been at it for 48 minutes. Let me just go to questions that I've missed. I'm going to go backwards. Okay, Alan mentioned Santos and BPT, and you are probably right. Let me just go pick those stocks up. In fact, I think I remember the codes. What is it? STO? STO-ASX. Let's look at Santos to start with. Looking really good buy, and you're quite right, looking really, really quite strong. And what I might do, just give me one moment. I am going to just go and look at the volume pictures behind the moves. Okay, Santos, extremely well supported by on-balance volume and accumulation distribution. Pattern's good, trend is great, volume's great, it's a buy. Okay, last one was BPT. The BPT-ASX. Okay, first of all, let's just check it from a pattern perspective. Looking like a great stock. Maybe I should buy some. Nice breakout to the upside when we go back to the volume charts. Extremely well supported by upward trending volume behavior, both in accumulation and distribution. And on balance volume, it's a buy. I could draw you accumulation patterns and W patterns in there. I don't have to, because you know exactly what I'm talking about. Okay, Barry's just got a question on the state of the VIX. Good point. When you say the state of the VIX, you're talking literally the state of the VIX. So I'm going to put up a VIX chart, and I haven't looked at it last week. Okay, the VIX has got a slightly rounded bottom and is at a point where it is reaching previous highs in the market. If we went and investigated those previous highs in the market, what would they represent? They represent the counter trends, or the last 3 counter trends in the market. Is this abnormal? No, it's not abnormal. Every time the market has a counter trend, fear creeps into the market. Put purchasing occurs, demand for those puts incur, which increase the price, which drives the implied volatility of the options in question upward, which is a reflection of the upward movement in the VIX chart. If we're here next week and we're above that line that I just drew, I would call into question there could be something nasty happening. But at this point, I don't see anything nasty. The only thing that could happen is that the market goes down. I believe it has a possibility to go down to that second trend line that we drew, and we might see it spike above. But at this point, as I stand here, there's nothing fearful on this chart. Let's come across to the Australian VIX, see if I can glean any information from the Aussie market. One moment. Looking at XVI, Australian VIX, I'm looking for some sort of elevation of the VIX, and I don't see any. The trend is down. I don't know what that big spike. There must be some sort of error on screen. But even if I drew a trend line across the screen, yeah, it's slightly elevated, but it's nothing. There's nothing big deal. The market's going sideways. There's no evidence of an increasing fear within this market. And I know with the VIX, often you see the fear after the fact because it spikes, but there's no major moves in this market. I don't see anything that really attracts my attention. Hopefully that's enough. Okay, there's a lot of people in this room tonight. Is it because it's the end of the financial year? Guys, if you are looking for some sort of if you want to talk to me about anything, I mean, we all know I've shown you my regular superannuation account, one of my accounts, and it's done really well. If you are wanting to take advantage and set yourself up for the new financial year, please just contact me. Happy to assist you in any way I possibly can. If you're into short-term trading, there's been a lot of success with the SPY short-term options ETFs. Please contact me. And because it's the end of the financial year, if you haven't done any of those products, you can twist my arm for a discount because it's the end of the financial year. So just send me an email, and if there's any interest in anything we do that you haven't done, just give me a call. Give me an email. Guys, that's it for tonight. It is time. Thank you. And I look forward to speaking to you all next week. Thank you.